Oh,
Like,
BlackRock's terrible. You know, they're
right.
one of the worst players on Wall Street. They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs.
We have been part of the huge revolution in investing through ETFs.
You know, they own more, their ETFs own more stocks than there are stocks. And they charge a fee for that. And they have incredible political influence that they use to make it easier for them to game the system. They are really a plague on capitalism.
It just identifies how much money laundering there is being done in the world.
Today, we are joined by Bitcoin maximalist Max Keiser, providing us with an update on Bitcoin, the crypto market, and shedding light on why BlackRock's Bitcoin ETF might not align with common perceptions. According to Keiser, BlackRock is poised to play a more significant role in 2024 than any other institutional investor. Despite maintaining a bullish outlook on Bitcoin's price, he emphasizes the unprecedented nature of the current situation, distinguishing it from historical trends. Keiser points out a substantial issue with the imminent approval of the BlackRock Bitcoin ETF by the SEC, warning that investors may not be adequately prepared for the impending developments. As of now, Bitcoin stands just above $43,600, marking an increase of over $6,300 in the last 30 days. Keiser delves into the global collapse of the fiat money system, predicting that the dollar will be the last currency to fall. In this context, he asserts that Bitcoin will emerge as a true form of money, immune to the influences of inflation and continuous government printing. The interview with Max Keiser explores his Bitcoin price predictions and reveals insights into how BlackRock's strategic moves could catch the crypto market off guard.
Wall Street makes their money and then they sell off bits and pieces, right? Companies go public and the insiders make tons of money, and then the public can buy shares in the aftermarket, and the feast has already happened and they can buy shares. But here in this case, the feast happened by the plebs, by the people who were marginally on the of society buying Bitcoin when it was $1 and $5 and $10. Now you see Wall Street coming in. So it's really a reverse of what we've seen historically with markets, in that the little guy got there first and they've made a ton of money. And now Wall Street comes in and everyone's going to make a ton more money. So yeah, BlackRock and all these other firms, Fidelity, will launch ETFs, and it'll bring in a tremendous amount of capital. And the product itself, the Bitcoin ETF, is an inferior product to owning Bitcoin outright, just like the gold ETF is an inferior product owning the gold outright, because in the gold ETF, if there's a credit problem with the custodian bank and they go bankrupt for some reason, it says in the fine print that they can settle with you, the ETF owner, in cash. So you don't get gold for your gold ETF. You get paper money, which is the thing you're trying to avoid. Same thing with a Bitcoin ETF. It'll have contingencies in the prospectus that make it very much inferior to simply buying Bitcoin and putting it into cold storage and taking it out of the system. But nevertheless, it will unleash a lot of capital. And, you know, we're going to get to a valuation of Bitcoin, which would be similar to gold. So gold is in the 10 trillion approximately market capitalization, the global gold stock that's traded. And Bitcoin is just under 1 trillion. So you're going to get a 10x on Bitcoin pretty quickly here. So you're talking 400,000 to compete with gold. I think we could get it on this move. You know, you're going to get it definitely above 250,000 on this wave, on this move. Will we get to 400,000 on this without a correction? And, you know, Bitcoin corrects pretty severely every few years. Possibly. We'll have to see how it develops. But I have a feeling that because the fiat money world is collapsing so rapidly, and the model of the nation state itself is collapsing, that, you know, we could be pretty shocked on the upside in terms of where Bitcoin is going. In dollar terms, the price of Bitcoin would go higher, right? If the dollar is going down, your dollar price in Bitcoin goes up. So we're very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, you know, as we see in Argentina and Venezuela and Turkey. You know, in these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually it too will go this way of all fiat money. So fiat money is we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world.
With an unwavering enthusiasm for the crypto domain, Keiser boldly foresees imminent explosive growth on the horizon. Notably, Blackrock and several other crypto giants are actively contributing to this momentum. Keiser confidently assures that a long-anticipated surge is on the horizon, especially as we approach the eagerly awaited 2024 halving event for Bitcoin.
Bitcoin is the fastest horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin. So, it's a supercharged way to play the collapse of the fiat money world, which includes the dollar. The dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization and a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. That in fact the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the US dollar are terrible. And everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world, and that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market, the global bond market. It's still incredibly cheap relative to what you could call the total addressable market, TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.
The Bank of Japan, a historical player in global currency dynamics, currently teeters on the edge of default, potentially triggering a worldwide economic downturn. Max anticipates an impending economic catastrophe fueled by collapsing fiat money systems, widespread inflation, and bank failures. In response to this crisis, he suggests a possible transition to a Bitcoin standard, signaling a shift in the world's approach to the looming financial challenges. Max argues that promises made by entities like the Federal Reserve and central banks have rung hollow, resulting in excessive money printing and a proliferation of risky investments. Following a recent surge in inflation, Max Keiser dismisses the likelihood of a return to the status quo, asserting that the economy has spiraled out of control, particularly with the United States grappling with an escalating debt crisis. Keiser paints a bleak picture, presenting two grim possibilities: hyperinflation or a deflationary depression, both leading to a deterioration in overall quality of life. Notably, he observes political figures discussing Bitcoin as a potential solution, signaling a potential shift toward a Bitcoin-centric financial framework. Share your thoughts on Max Keiser's latest interview and his Bitcoin predictions for 2024 in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.